Hello, it's Robert Miner with Dynamic Traders Group with our DT trade strategies for the week beginning January 4th. 2021, and a Happy New Year to everybody. I've been off the last couple weeks, so let's get the new year started right, and hopefully we'll identify one or two potential trade opportunities for this coming week. That's what we do every week with these videos. They're brief videos to identify one or two trade opportunities or potential trade opportunities, and we get very specific about what the setup is and what the trigger is. A lot of times they don't get triggered, but hopefully if what you learn here you like, number one, you can apply it to any market in any time frame, and hopefully you might want to continue with your education with one of our DT reports where we have a trial from just $19, and also you can check out my book, High Probability Trading Strategies. Okay, let's get started. 2 weeks ago, one of the featured markets we had in this video was the dollar, and of course the euro trades just the inverse of the dollar. I'm going to update that because, as I showed you 2 weeks ago, the dollar was coming into a time and price and pattern. Everything was coming together for a potential for a weekly low in the dollar, weekly high in the euro. We hadn't made the signal yet, but the language that I use is that it's reached a place from where a reversal of whatever degree we're looking at can be made. That's mainly because of time, price, pattern, and momentum. We look at everything dual time frame, and they were all in place for a potential reversal. Then we just have to identify the reversal signal. Well, I'm going to take a look at the euro, which is just the opposite of that. The dollar never made its reversal signal, neither has the euro, but we remain in that critical area where we're in a position to complete at least a weekly high in the euro, weekly low in the dollar, potentially more significant higher low. Potentially we're going to finish off the bull trend from the March low. Instead of 3 or 4 weeks sideways to down, we might have, let's say, 2 to 3 months sideways to down, a little higher time frame correction. Okay, where are we at? Real briefly and real simply is that as of 2 weeks ago, the euro had reached the end of wave 5 target zone. That's the ideal end of wave 5 target zone. The dollar had reached also the end of wave 5 target zone on the downside. We remain in that target zone, pretty powerful zone. And actually, 2 weeks ago, the closing high in the weekly data was the highest closing high so far. So this is 3 weeks that just kind of stopped it right at the upper end of that zone. So we're in very significant price zone to complete the whole pattern coming up from the March low. 2 weeks ago, we made a dual look back weekly momentum bear reversal that usually indicates that within a bar or two, we're going to have a price reversal. So we're getting near the extremes of when we would typically be followed up with a price reversal anytime now. And we've had, of course, some news events these last 2 weeks that have kind of hasn't increased volatility in the market. It's kind of stopped some of the trends in the market. I think traders are waiting to get past these news events to see if anything dramatic happens. And of course, we're near the end of that series of news events. We had the Fed announcement 2 weeks ago, and we frequently stop trends or have reversals right around the Fed announcement in the euro. We had the winter solstice. We always want to be alert that week for a potential reversal in the financial markets. And then I've even noted here last week where that $600 relief bill got passed in the United States. And of course, this coming week, there's two things. Is one, I think they've already shot down the increase to $2,000 on that or the relief bill, but then we have the confirmation of the Electoral College and Biden's election as president, and there's going to be some challenges to it probably. Of course, the challenges will be overcome, but I think also still people kind of holding on for the next few days to see if anything dramatic were to happen. So what you want to be aware of if you trade the euro is that we're near these extremes of price, of time. We've already made our weekly momentum's dual look back bearish, and we've already made the weekly high. It was 2 weeks ago on a closing basis at least. So our job now is to identify a smaller time frame like in the daily data reversal, and any daily reversals should coincide with the higher time frame weekly reversals. Here's our daily data coming up with what I have labeled as a wave 4, and boy, this is subdivided almost perfectly into 5 waves into last week's high, and then on Thursday, day before our the New Year's holiday, big reversal day, closing down below the closes of the past 2 days' close. We call that, and that was an outside 2-close bear reversal, and of course we made a bear reversal in the daily momentum. So what will confirm this reversal, and that's what's really important from a trading perspective, that will be a close below the closing low of what I've got labeled as a wave 4 or 5. So it's very significant, and that's what you want to be aware of in the days ahead, is that a close below the December 22nd close at one spot 21,610 should not only complete a daily high, not only just a weekly high, and that should be followed by a minimum of 2 to 3 weeks sideways to down, and at least it'll be, again, we're not forecasting, we're identifying a trade opportunity. That will be a trade opportunity to take advantage of with defined capital exposure, and with potential for fairly significant on the downside. So we're not going to have to risk too much to get positioned for a potential minimum 2 or 3 to 4 week sideways to down, and possibly 2 or 3 months if we completed the advance from the March low. So just one more very quickly, and it's a special situation. It's the VXX, the Volatility Index ETF. This is the weekly data for the VXX. Keep in mind that even these 1 or 2 day or 1 or 2 week pops and 2 or 3 week pops, even these small ones can be 20, 30, 40%. So it's also the capital exposure can be higher. So you simply adjust your position size if you do take a trade in the VXX. But I think it's what we call special situation. And needless to say, if the VXX is looking like it's going to make a weekly low, that means the stock indexes are in a position to about the same time make a weekly high. So here's the VXX, the relatively short look back sensitive 5 week DT oscillator is oversold. That's in a position from where weekly lows are typically made. And we didn't trade straight down into it. We've basically been sideways for 4 weeks, and that's actually revealing. Here's the daily data, real simple. As of Thursday, or it might have been Wednesday, daily momentum's made a bull reversal from near the oversold zone. These are Bollinger Bands. I don't use them all the time, but they oscillate from relatively wide during volatility to relatively narrow when there's little volatility. And of course, volatility cycles, just like price does, actually it's probably more reliable cycles than price itself is. So it's in a position to break out of a prolonged period of narrow volatility. So what I'm looking at is if we close above, I think this is Tuesday's close, 1743, we've probably completed a weekly low. We ought to be sideways to up following that for maybe just a week or two, not necessarily a great advance, but the beauty of it is it's a very well-defined, fairly minimal capital exposure for the potential of a pretty good run, percentage change-wise. So you might want to take a look at this trade and the potential for it next week. Again, it's not at this point in time, it's not even triggered till we close over 1743. But I think it's a special situation you might want to be aware of. That's it for today. Hopefully you have a fantastic week. As always, keep safe, wear your mask, keep your distance out in public, and keep you, your family, your neighbors, everybody safe until everybody gets vaccinated, and that'll help protect us as well. Okay, that's it. Robert Miner, over and out. Take care.